Engineers India is the stock on our radar now. The Q4 earnings beat estimates in this quarter. The total order inflow was strong, but EBITDA was lower due to provisions in employee costs. Sanjay Gupta, the chairman of Engineers India, joins us on the line now to talk about that. Mr. Gupta, good morning. I'll come to your revenues in a bit, which was very strong. But before that, your margins have been under pressure because of higher employee costs. I do know that 92 crores is a provision for gratuity, but there is a sizable portion that is not a one-off as well. So can you tell me what is a sustainable EBITDA performance for the next few quarters, and what could your margins be?
Good morning, ma'am. I think the most exciting news for the last year has been that we have a very strong order book at hand, and probably we are going to ride extremely high on that. I'm quite sure the market should also be equally excited about it as much as we are. I thought we had a strong year in spite of the in spite of the past couple of years where we had a very sluggish market, so to say, in which the order books were under some kind of stress. But I thought the last year was some kind of a changeover from that perspective, and we had an extremely strong order book. I think from here, as I had been mentioning to the press even earlier on, we will only gain strength. So that is one part which I thought is a good story to build up.
No point. Yeah, I'm not disputing that at all. I mean, for the full year, there's a 20% growth even in your earnings per share.
That's right.
I'm not taking that away, and so is the big growth in your order flow as well.
Yeah.
A strong at 3560 crores, we understand, versus 1590 crore in the previous year.
That's
now,
right.
How long does this suffice, 3560? What is the visibility in terms of, does it last for 12 months? And how does FY18 look? Are there enough L1s or bids out there that makes you believe you can better this 3560?
I'm quite sure on the numbers, of course, there is always a subject of discussion and debate. But the important part is, yes, we have a very strong order book, and I think the next few quarters are going to be very, very exciting. And the more important part is some of the big projects which we had been banking on for quite a while. I think all of them are under revival. For instance, I think some conceptual work on Rajasthan refinery has already commenced. And I think that's a very great news insofar for the whole industry is concerned, because this is a very large project, and we've started some kind of pre-project activities also on that. So that's a very good signal. There are good things happening in the international market as well, where we were already doing a very major project in Nigeria. And I think the discussions are on. We've already settled a reasonable amount of a purchase order on that, and I think as the discussions are progressing, we do hope that that also would bring in some good news in the next couple of quarters.
Mr. Gupta, I'm sorry to come back to the first question, but the stock is under a bit of pressure today, perhaps because the margins for this quarter have fallen quite a bit compared to what you saw same time last year. Can you once again tell us what the sustainable margins could be for the next few quarters?
I think we will be doing much better than what we have done in this last quarter, so to say. And I think that's a fair indication which I can give. Obviously, as far as we are concerned, there are two important segments in which we operate. The last couple of years, the LSTK segment on which we were under tremendous pressure, and that we saw a continuity of that in the last few quarters as well. But I think our order booking in the last year has been so significant in this particular segment that we do expect that things will pick up in the next few quarters out here, because I thought we have over 3,000 plus crores of EPC order booking in the last year itself, which is very, very significant. So obviously certain things which we have seen as part of a carryover of the past perhaps will ease out in the next few quarters, and when we are going to see definitely much better results.
Okay, so then let me put it segmentally, since you spoke about the lump sum turnkey segment. Do you expect to retain this level of margins in the turnkey projects? I mean, it's over 30%, 35%. And therefore, for the overall company, should we expect margins in the range of, say, 16 to 20 rather than 12 that you did in the fourth quarter?
I think that would be a fair assessment, but coming specifically on the question of the EPC segment which you mentioned, EPC segment and the projects always have a certain cycle time. Okay. And since they are risk-prone projects, there are always provisions in the contracts which often get settled towards the closure stages. So most of the projects which were in various stages of completion, one by one, are achieving a certain stage of closure, and the new ones are beginning to pick up. But the important part is the consultancy segment, on which is our traditional core business. I think we've been fairly steady out there. The operating margins have been good, and I think we've been doing reasonably well on that sector, and rather steadily at that. I thought we were 14% up on that, and I think the operating profit also has gone up considerably, banking specifically from certain closure of the LSTK
So,
segment
Mr. Gupta,
projects.
on consultancy itself, you think this 37% margins which you've clocked in, you think that's something that you can do even in the next 2 quarters?
I think we will be fairly steady. I think I would like to be in the band of the overall bottom line. I thought because in consultancy, it's always a cyclic business, a little bit here, a little bit there. But I think the margins or the guidance which we have for this particular quarter or the bottom line for the whole year, so to say, I think would be in a position to sustain that.
Yeah, just one final question. Since you spoke about HPCL resuming its work, its 41,000 crore project in Rajasthan, what have you already got from HPCL, and what are you expecting from this project?
Actually, the project, the first initial part was to put together the DFR, which has already been done. The project is under now final stages of approval. But in concurrently, we always start some pre-project activities. So some initial work to that extent has already commenced. And we do hope some action on the ground towards the early part of next year, perhaps. That should be a fair assessment going forward from now.
Okay, Mr. Gupta, thank you for joining us and giving us your view.